Greetings everybody, Sive is here with the Forex Peace Army. Let's take a look again on the euro currency. Today we have a few issues that we need to cover, just because some tricky moments exist that you need to know about. So, in general, all markets ahead of the coming probably shutdown final point showing some performance, especially gold. Gold just is going ahead of all of them, which is actually we're really pleased to see. But on euro currency we have a bit shallow performance. So in fact yesterday it was inside session, and in recent week we have a few of them. So this was inside session, this one again, and currently it's also very small bar. At the same time, overall intraday performance looks more bullish to me rather than bearish. So nominally daily trend remains bullish. Here is market is moving gradually higher. On the fall time frame chart, you could see that the same consolidation stands between two levels that we discussed recently. These levels, well, I'm just keep it in place just to show you that that was a confidence area where market stands right now. It's a really good sign that recently market has shown a reversal bar to the upside, and it's actually challenging the resistance. The attractiveness of the current situation, guys, stands in an early and fast result. Why? Because market has to either break it up or you will get significant downward action. That's why in the current circumstances, if you intend to trade in the long side, you do not need to place stops too far. So even below this reversal bar will be probably enough, or even close, as I will show you on the hourly chart a bit later. But in general, you could use these lows, or if you'd like to, these lows, but anyway, it should be relatively close. You do not need to place it too far, because that is the point, is a kind of the culmination point where a market well, has to show the performance. So it has to break this area if it has the bullish ambitions, or that will just turn to the deeper retracement. On my FXCM chart, which is actual retail broker, here's we have the bearish grabber. But if you take a look at the exchange traded market, so for instance on a dollar index, we do not have the grabber here. On the futures of the euro currency, we also, for just a few pips, we do not have the grabber. So this grabber has not been confirmed on exchange traded markets, and we should give the priority to the exchange traded markets if you have some doubts on one or other pattern. Besides, also indirect indicator, if you'll take a look at the 10-year bonds, you could see here we have on the weekly chart bearish grabber that has been formed. It suggests, yes, we do not have yet any progress with it, but in general it suggests drop below these lows. So it suggests some weakness in yields. That is also, well, potentially might make pressure on the dollar performance as well, if of course this will not be due to the safe haven demand. So that's what we have on the cross-market analysis. That's why if you take a look at the performance on the hourly chart, personally I think that this tendency should keep going, and one of the patterns that theoretically might lead market to the 1630 area, it might be the 3 drive. So that's very commonly forming when you have the butterflies, fast acceleration to the 127. Also, I'll take a look this retracement yesterday. It was just really great. So if you remember yesterday, we talked about this possible ABCD with this triangle. We have here some triangles, so it's maybe retesting of the lows. This we talked about this support area for position taking and hiding the stop. So in fact, we have Gartle's triple to buy here, although the AB is not equal to CD, but this is still ABCD pattern with this Gartle's triple to buy. So this one might be another butterfly, and actually its target stands precisely at the same point where we have a combination of other targets, which is the COP, correspondingly two extensions of this butterfly and that butterfly. That's crossing in the same area. All of them stand somewhere around 1620, which is very close to the Fib resistance 1628 right there. So from that standpoint of view, I do not have, well, I do not see anything wrong in the current situation, and everything goes really nice. So if you would like to possess yourself with all this stuff, probably this level will be enough to hide your stop. It's confidence, because we're based on the particular patterns. If market will drop below it, it means that all this stuff will be destroyed, and just short-term context will be destroyed. That's why you do not need to actually give market too much space to come to the conclusion. So that's probably enough for me for now. Let's see what will happen and discuss the situation tomorrow as well.